All right, guys, let's take a look at this. So you got an alert. Everybody gets alert to some point in their trading career because they say, hey, man, this guy's making money. Let me just do what he does, and hopefully I'll have the same results. So let's take a look at this, guys. The thing with alerts is the point is that you should be looking at the alert and you should be saying to yourself, what is this guy looking at that he wants to take this trade? Right? So if you're following somebody and he tells you to get in at a specific point, you have to remember that one, you're taking the alert a little late because if it's not live, if you got a text message or an alert when the automated system on Thinkorswim finally manages to send that alert to you, you have to realize that there is a slight delay. And if you're not the only person following that alert, you have to remember that a ton of other people now are trying to get that alert as well. Whether it is to buy or to short something, you have to remember that, okay, there are other people that are also trying to get this alert. So it's going to start changing the price depending on how big the group size is. So you imagine if there's 100, 1,000 people. Remember that if somebody sent you an alert based on a specific pattern, that there are probably tons of other people also trying to take the same position because they see the same exact thing. But what I want you guys to take notice of is when you're taking an alert, what you need to do is pay attention to your account size and what you can handle and what's actually going on right now with the symbol that you are looking to trade. Because what happens is if you're not paying attention to that and somebody tells you to buy puts or buy calls and you're not paying attention to what the stock is actually doing right now and you just jump in, oh, let me get it, let me get it, let me get it. What's going to happen? You're going to jump in too late and the thing is gonna bounce or the thing is gonna bounce up or down depending on which way you're going because you didn't pay attention to simple things. So for example, let's just take a look here at SPY. So let's take a look at the SPY. If SPY, let's say somebody gave you an alert to take SPY after it broke down at 950, right? It broke down, somebody tells you at around 10, hey, let's take SPY short. It's about to break this 50 MA and it's gonna head down to this 287 level. And you're like, yeah, let me take it because it looks awesome. I mean, you look at SPY, it's breaking down hard, a lot of selling pressure coming in, and you're saying to yourself, oh man, I can't miss this. I got to take this trade. And you go heavy and you're like, oh man, let me just take 50 contracts of SPY right now. Let me take 100 contracts of SPY right now. And I'm gonna make some money today because this thing is going down. Everything is breaking down, right? And I already told you guys earlier today, you need to have a nice little scan where you're looking at one chart, another things. You look at the markets, the tick, look at those internals because they will save your ass. So that way you don't make irrational decisions based on somebody else's influence on you. And you know, I know people subscribe to Benzinga and a bunch of other services that provide alerts. And it's just one of those things, guys. You know, if you're being influenced to take a trade that you didn't properly analyze, this is when you're going to get hurt. And yes, I'm not saying that alerts don't work. Alerts work, you know, when times are good. You know, sometimes things are just perfect conditions and man, you can take a trade and you're just going to make a ton of money. But overall, you need to make sure you're paying attention to what you're doing and why you're doing it. Because if you don't understand the trade, you should not be taking the trade. You really need to analyze the trade and pay attention to what you're doing so that you can see that is going to pay off for you. And you should definitely analyze the trade based on your account size to see if you can even afford it, because you can't be taking things out of the money, especially when the VIX is at such a low point like it is now. So for example, let's say somebody tells you, again, let's go back to SPY, somebody tells you, hey, let's go ahead and take this short, and you took a short here, and you didn't pay attention that the RSI was already at an oversold position here on the 10-minute. You know, you didn't take a look at the market. So let me bring that chart over here for you guys. Give me 1 second. All right, so let's take a look at the markets here. Same thing. At 10:10, 10:20, they're already, all of them are dipping beneath the RSI oversold area, and they started to form these patterns. You know, you have the VIX forming a topping formation here with the overbought areas here also starting to say, hey, man, and again, I told you guys, usually between 10:10 to 10:20, you may get the morning highs or lows. And by 10:40 to 11, you're going to start seeing the reversal. But what was the biggest warning today? Today, the biggest warning was the tick. And I told you guys earlier It might be one of those days where you shouldn't even be trading. You know why? The tick already told you. And today, everybody got stopped out on both sides. People went long and got stopped out. People went short and got stopped out. You know, yeah, some people made money today, but a lot of people get stopped out on days like this. And this is why I made it a part of the rule on the box in trading course that, you know, when you open the day like this, it's just better not to even trade. You know, why? Why risk money? I mean, the best strategy for days like this is probably to do spreads and collect some premium. And let's just time and theta pretty much take away at the value of those contracts. And then, yes, you'll make some money, you know, and that's it. Because today is just one of those days. Just chop, 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 you know. And that's what we're looking at. So let's take a look at another stock here. Let's see what's going on. So let's say somebody would have told you today. Let's pull up Amazon. Somebody tells you today, okay, let's go ahead and short Amazon. Let's short Amazon. Short it, short it, short it, short it. This thing is going down to $1,850, $1,800 level today, guys. It's going there today. It's breaking down. And by the time you got that alert, it was, let's say you got to go to alert here. You got it, let's say, what time is this? This is 9:50 again. Yep, 9:50. You got it at 9:50. You got an alert that says, "Hey, short Amazon." And yes, boom, Amazon did have a nice breakdown. But you just started saying, "Oh, it's going down to 1850." I trust this guy. This thing is going down to 1850. So let me get the 1850 puts. And you say to yourself, "Let me get the 1850 puts, which are worth pennies." You know, maybe earlier today they were worth 75 cents or something like that, right? And you took this trade. Look at how time is killing this position right now. And yeah, initially it might have come your way and you were doing okay. But now, because of time, and I don't have the recording of what the prices actually were, but I'm just giving you an example what happens when you can't afford it. Because you're just like, you know what, Ron? I can't afford to buy these in the monies because they're so expensive. You know, they're $700 plus, you know, $1,000 plus, you know, earlier this morning. I can't afford to buy those. So I'm just going to buy 1 to 5 of these 1850s. I can afford to buy, you know, $75 to $200. Let me go ahead and put in an order down there. But this is what happens. Time kills you. So when you can't afford to buy something in the money, just don't trade it. Trade something else. So you have to pay attention to the little details and things like that. The things that are going to keep your account alive longer, you know. So you can't just be taking trades because you got an alert. You have to analyze the trade. Pay attention to what your account can handle. If your account can't handle the trade, do not take the trade. It's as simple as that, guys. You do not need to take a trade your account can't handle. And that's all I want you to pay attention to. So for me, the one thing I like to look at, I like to analyze and pay attention to see what is going to be the best structure. Should I do a spread? Should I do an in the money spread and out the money spread? You know, should I do a single call, single put? You know, I pay attention to everything. Do not rush into anything. Pay attention to what the risk is compared to the reward. You want a small risk to a larger reward. If you get stopped out, it's fine. Cut them at the knees. Just take them out. Take your emotions out. At the end of the day, we, the traders, are the weakest links when it comes to any trading plan. And when you fail to follow the rules of any trading plan, you know, where there's the box-in trading plan or any other trading plan that you follow or do, you know, you have to know that if you're not following it, the rules to the T, that's what's going to end up hurting you in the long term because you're taking away the edge. And the edge of any plan is the you know, the rules where it says, hey, you know, if you're risking 1 but your reward is going to be 10 and you start disobeying it and then you start taking your stops at 2 or 3 or 4 because you're like, no, it's going to come back, it's going to come back. So basically what you wait for is the pain. When you see the pain come in, it's like your stop, let's say, was going to be $50 to $100. And then you're like, it doesn't hurt. I think it's going to come back. It's going to come back because you're starting to put your emotion. No, this still looks good. It's going to come. And then the thing breaks down and now you're down $500 or $250 and you're like, okay, now it hurts. Let me go ahead and get out. In the long term, when you start adding those bigger and bigger losses that you should have only had 150 to $100 on and you start making them bigger, that's what's gonna start you know, breaking down your account to the point where it's like, man, I'm losing too much because you just love pain. I mean, I'm telling you guys, and don't oversize. You know, don't oversize because, you know, it's like, oh, this is gonna go, let me just get, you know, a ton of contracts here, let me go really, really heavy. Those times will come when you should be going a little bit heavier, usually when the volatility is higher. Obviously you want the VIX over 18, 20, 25, 30, man. Those are the times when that's gonna be a good time for you to go heavy. Not too heavy. Obviously, you don't want to blow up your account because if things turn around. But those are the times where you want to analyze and start layering in and maybe adding a little bit more. But when the VIX is at this lows, the market's really choppy and it's not doing much, you need to start analyzing things more properly. And when you get an alert, take the time to pay attention and make sure that everything fits the conditions that are required for that target, because you don't want to blow up your account on somebody else's advice. You know why? Because those are the ones that are going to hurt you the most. You're going to be so upset because you didn't listen to yourself, and you're going to be like, oh man, but I thought it was going to do the opposite of that or whatever, and I didn't listen to myself. You know more than you think you know. You've been probably trading for years, and you get a feel. Everybody has this this intuition when it comes to what they're looking at, because you've been doing this for a while, so you already know. So trust yourself. Trust yourself and always keep learning. So this is one thing I keep telling you guys. I recommended a ton of books. There's a reason. Take what you can from every different source and learn. Apply it to your system and your trading strategy. And that's what's going to ultimately pay off a little bit more for you in the long run. Stop trying to hit home runs all the time. They will come. But get steady and consistent gains, and I promise you, you will feel much better about your trading and your trading career. And that's pretty much it for today, guys. I hope I was able to bring some light on how to handle alerts. So in summary, don't jump in blindly because if you don't know that person's trading plan, you're failing. The point is to see what the alert is and why the alert was sent out, and learn from that so that you can find your own. So if it works out, great. If it failed, why did it fail? And then you need to pay attention and learn. Okay, well, this failed, and then because of this, and I should have paid attention to that. If it worked, you say, okay, this was happening and this was happening to support it. So this is why I gave you guys that overall scan. Pay attention to what the market's doing. Pay attention to what the sector of that particular stock is doing. You know what I mean? Little things like that are going to make a huge difference when you take trades. So again, guys, thanks for watching. Don't forget to subscribe, and I see you guys next time.